I have just paid my crypto tax. It hurts. I've gathered and used as much information as possible on this matter, used all allowances, tax breaks, loopholes I could find. And the thing is, crypto tax is so new that not even all accountants can keep up with the changes, let alone if you are trying to do it yourself. So this video will be about how you calculate your tax, how you can avoid getting taxed on your crypto, and I'll talk about some new guidelines from HMRC for 2022 that might make crypto taxation even worse than what it already is. Hello guys, and welcome back to my channel. My name is Anastasia. On this channel I talk about investing. I usually talk about investing, but this video will be about taxes. It is that time of the year when everybody's paying their tax. I never liked tax. I don't know many people who do, and yet everybody has to pay it. And the most painful of all taxes for me is my crypto tax. On top of me not being able to understand why I have to pay tax on a currency that has nothing to do with the government and in general is supposed to be decentralized, the whole process of how you have to calculate the amount you must pay is very painful. Last year I made a video with my thoughts on the matter. It is basically me moaning for 10 minutes straight about how to calculate crypto tax and how to avoid it. This year I'm filming a video with some solutions, so keep watching and hopefully it will be useful for you. So how much tax do you pay from the gains from your crypto? It's no different from your usual capital gain or income tax. For the income from 0 up to £12,570 per year, you don't pay any tax at all. Then from 12,571 to 50,270, you pay 20% tax. From 50,271 up to 150,000 per year, you pay 40%, and 150,000 and above this income, you pay 45% tax. The rule is the same as for any other income. The problem is the process of calculating the actual gain, and the main question is, what is a gain when it comes to crypto? The answer was pretty clear until recently. Look at the guideline from HMRC that was published on the 2nd of February 2022. Remember, it's a guideline and not a law yet. The first changes that were made on the website weren't clear enough on whether your decision to stake your tokens or provide liquidity is in itself considered a taxable event. On the 22nd of February, however, some examples were given. With the examples that they gave, I found it quite difficult to understand it anyway, because English is my second language, but I think even for people whose first language and native language is English, the terms and the words that are used even in examples are so difficult that it's quite hard to get your head around it. But at some point they make a referral to the section 48. I will leave the link to this page in the description box below this video, so if you want to take a look, please do so. But let's have a closer look at this section 48. And it states clearly: the immediate effect of the decision is that where consideration for a disposal is payable in foreign currency, that currency is to be brought into account at its value at the date of disposal. If the value of the currency subsequently falls, so that its value on receipt is less than the value brought into the account, the shortfall is not irrecoverable consideration and no claim can be made under section 48. And if under foreign currency we understand crypto tokens, it becomes clear that every time you lend your tokens, aka you provide a liquidity, for example, it becomes a taxable event. Plus, every time you receive your reward, they are taxed as well. And this should make you think twice whether it's worth doing it at all. But as I said, these are guidelines and not laws that we must obey. I don't quite get it why they'd bother writing and publishing the whole thing if making it a law wasn't their plan. plan, but I can't be sure. So as you can see, every year crypto tax becomes more and more complicated, and it's getting more difficult to find a way to avoid it. There are still some ways of reducing your taxable amount. Let's look through the main tax breaks and untaxed events. There are some tax breaks that should save you some pounds. I've used all of them and it has reduced my tax for this year significantly. First one is personal income tax allowance. For the tax year of 2021 to 2022, it's £12,570. This is the sum that you don't pay any tax on. But remember that there is no personal income tax allowance if you earned more than £125,140 a year. The next one is capital gains tax-free allowance. It's £12,300. This is the sum that you have to deduct from your total capital gains for this year, as it doesn't get taxed. Next one is trading and property allowance. It's £1,000 that is tax-free from your trading or property. In other words, the majority of people can get over £25,000 before they start paying any tax. If you used all of your allowances, then you can gift your crypto to a spouse and they will get the same tax-free allowance. So from the financial perspective, it always makes sense to get married, it seems like. If you are thinking about making donations to a charity, it will be tax-free as well and won't be considered a taxable event. Some activities with crypto are not taxed either, and you should definitely know and consider using them. Adding new or removing liquidity is tax-free. It becomes a taxable event only in case you receive a liquidity pool token in exchange for your original tokens. Then, transferring coins between your wallets is not taxed, but the transaction or gas fee you pay is taxed. Crazy, right? Anyway, you have to keep track on the difference in price of the tokens you paid your gas fee in between the moment you bought it and the moment you had to pay the fee. Buying crypto for fiat money is not taxed, but buying crypto for crypto is taxed. For example, if you want to buy some bitcoins, it might be cheaper for you to buy it with pounds than with Ethereum that you already have in your wallet. Keep this in mind. HMRC has direct information about the users of centralized exchange platforms such as Coinbase or Binance. Decentralized platforms such as Uniswap or PancakeSwap are much harder to track. Therefore, HMRC can only require you to fill out your tax return properly, but in theory they cannot track it. I guess they didn't come up with a solution. Well, not yet at least. These are the easiest and totally legal ways for paying less tax on your crypto. In my video last year, some people left very useful comments. I'd like to mention some of them because they are still relevant and they might be helpful for you as well. Cold wallets cannot be traced, but they have access to all information from exchanges or trading platforms. So you can take it out as cash during holidays, but there can be questions when you try to legalize large amounts of cash. Money laundering, it's called. But you can buy assets in Ukraine, which is where I'm from, with your Ukrainian passport and forget to declare it in UK, or become UK non-resident, or just do monthly Ukraine trips and take out cash only to cover daily UK life needs. At some point you create asset management company in tax-free country which deals with investments and profits. And even though cold wallets can't be traced, as AGN says, you must transfer your crypto onto a wallet from somewhere, usually from a crypto exchange anyway, so HMRC will know how much you had since exchange platforms are obliged to provide this information. Making a monthly trip to another country might be a good idea for some, but it's not an option for the majority. As for if you forget to declare something, it's already a fraud, and I can't promote that, and truly speaking, I wouldn't want to do it myself. But opening a company in a tax-free country could be a good solution, but a bit of a troublesome idea, especially at the start. But the larger the sum is, the more sense this solution will make. There are several crypto tax-free countries, and there is an article on Koinly website which will tell you more about it, and you will find the link to this article in the description box below this video. And if you don't know what Koinly is, I'm gonna talk about it a little bit later in this video, so stay tuned. The profits that you make will be taxed. The crypto you earned will be classed as income, and the profits you made from swapping, selling or spending your crypto will be taxed as capital gains. The main idea is you pay the tax on the profits you make. And the way you calculate your profits is by calculating the difference of your token price at the time you bought it and the price you disposed it at. The rules are pretty basic, but the more trades you make, the more coins you buy, it can get very complicated. And luckily there are services that solve this problem. So let's look back at the comments under my last year video again. Apparently Koinly is a good option for tracking your transactions to pay taxes. Staking and DeFi is another level, as you can get paid multiple times a day and each time is classed as a taxable event. And then I respond to this as perfect advice, thank you, I've never heard of it. I had never heard about it back then, but now I have. And I'm very happy they agreed to sponsor this video, so Koinly is a perfect solution for someone who values their time and is the best way to simplify and speed up the whole process of counting your crypto tax. I leave my affiliated link below in case you decide to register. But first of all, what is Koinly? So Koinly is the easiest way to calculate and track your crypto tax liability. You can simply connect your crypto wallets, exchange or blockchain addresses to Koinly, and they will automatically generate the information you need. You can connect 370 exchanges for Koinly to generate your report, 77 wallets and over 6,000 different blockchains. It's available in over 20 countries, so you can be pretty sure that the service will be available for you. There is a simple dashboard to track your overall portfolio, and you can produce the report that you need to file for taxes in your particular country. And by the way, it's free to sign up, so there is really no reason not to give it a try. With Koinly, the process will take less than 20 minutes, and if you were doing it manually, it might take hours. In my case, it will actually take hours, as I traded quite a lot of crypto this year. Well, I hope this video saved you hours of research and deserve a like. But in any case, thank you very much for watching, and I hope to see you soon in my next videos. Bye bye guys!